Hey, if you're an options trader and you're just having trouble getting to that next level of profitability, you just can't string enough winning trades together all at once, there's one major thing that you really have to remember, and that's the direction of the stock overwhelmingly is going to decide whether your trades are profitable or not. You really have to understand which way the stock is going to be a consistently winning options trader. And so there's probably one thing that's holding you back on learning how to do that, and that is learning how to read the stock charts. Technical analysis is what it's called. So in these videos, I talk about the stock charts. I show you my charts. I show you what I'm seeing. I've been in this business for over 30 years now, and learning how to read the stock charts, trying to figure out where a stock may go or may not go, is paramount to you becoming a profitable options trader. So I make these free videos for the trading community. We're here to help each other. So I'm going to show you my charts. We're going to go over the indexes. We're going to go over individual stocks. And I'm going to show you some very simple techniques to how to figure out or how to see which way a stock is going and work on your timing to better understand when it's time to get in and or out of a trade. All right, so let's just jump right into the charts and start to take a look. Hey everyone, Lee Lowell here from smartoptionseller.com. So what we do typically, I make these free videos almost weekly, just going over the charts. You got to put in the time, you got to put in the effort, you got to put in the research, you got to do the work. So if you want to become a profitable options trader, you have to look at your charts. And we do this on the weekend to get ready for the next trading week ahead. So what do? So what you're seeing in front of you are the charts that I use. I just want to quickly go over, the setups that I have in front of me here. For the newcomers that are here watching for the first time, I go over this pretty quickly. So the veterans that watch me all the time kind of know what I'm about to say here. But up here, this is the price action. Okay, what you're seeing in front of you is a daily chart. Open, high, low, close bars. Each one of these little black lines is 1 day's worth of trading. And I have 3 moving averages that I use. I'm keeping it simple. I got a 20-day, 50-day, 200-day moving average, all simple. So we have the blue 20-day here. We have the red 50-day here and the green 200-day moving average. And down here is the only other indicator I use. It's called the RSI indicator. It's an overbought, oversold oscillator. And it, as you can see, it oscillates between overbought and oversold levels. The 80 level is the overbought. The 20 level is the oversold. And you can change those to any overbought or oversold level that you want. The default, I think, is 70-30 or maybe 75-25. I move it out a little bit to 80 and 20 because I really want to see the extreme movements. And when you can see here, this is hitting up on the 80 level, and it's based on the price action. Okay, so wherever the price action is, it's gonna move the RSI down here. All right, and then these other lines, you see these blue lines. These are what's called channels. So these are hand drawn. And the biggest thing that's going to help you as an options trader or any kind of trader to figure out which way a stock is going is to look at the trend. And we use these channels to determine and define the trend. You'll always hear people say the trend is your friend. And why is that? Because stocks trend. They move in a certain direction for a certain period of time. So you want to get on board of the trends. That's the best time to take a trade is once a stock has made a trend, and that's to get on that trend. If it pulls back, you can buy in to get ready for the next leg higher, or if the stock is going up and hitting a top and you want to get short or bearish the stock, you wait for it to hit the top and then it will hopefully go back down to give you a winning trade. So you really want to know what the trend looks like, and you hand draw these channels to just let you know which way a stock is trending. It's a good visual. It's good to help you see, and you can see the stock moves in, inside of the channel here. So you can get in on a pullback or resistance at the top. All right. So those are just, some really basic things that you have to learn and know what to look for. So what we're going to do here is we want to look at the indexes first, and then we'll look at some very popular individual stocks, and I'll show you like the chart patterns, the support and resistance lines, how they're reacting to the moving averages, all these things to help you become a better trader. Now, what we like to do first, we always like to look at the indexes. We look at the S&P 500, the NASDAQ, and the Dow Jones. Those are the 3 main stock indexes. And we use the charts with the exchange traded funds for each one of those indexes. This is the SPY, the SPY. This is the exchange traded fund for the S&P 500. Now, so what do we see here? What's been going on in the stock market? Well, this week, so the very last bar here you see over here, this was Friday, June 14, 2024. The stock market, based on the S&P 500, has hit more all-time new highs. This is an all-time high. Now, this is, as I said, a daily chart. We can go and look at the monthly chart just to get a longer-term view of the market. So here we go. My chart goes back to maybe 1993 or so, and you can see the market just goes up over time, and we've hit all-time new highs this week. So we like to focus on the daily charts here. We go back to that, and here you can see Wednesday, Thursday, Friday this week, the market hit all-time new highs. They had the CPI numbers that came out on Wednesday here in the U.S. That's a consumer price index. Was not as strong as analysts thought it would be, which means inflation's coming down. The Fed, the U.S. Federal Reserve, is probably going to start lowering interest rates somewhere, towards the end of this year. So that rallied up the market. You can see the gap up we had here. Gap up is when this is where the market closed on one day, and then it gaps up and opens a lot higher the next day. So you have this little air pocket here. It's what's called a gap. So Wednesday, Thursday, Friday this week, market made all-time new highs. So the market's bullish. The market's going up. And I say this every time I make these videos. Over the long run, the market will go up. And why is that? Because the market is made up of real companies that make real products that people continue to buy over time. And as long as these companies keep creating products and have profitable earnings quarter after quarter over the years, there's only one way for the stock charts to go, and that's up. Okay, and this S&P 500 is made up of these profitable companies. So over the long run, I'm talking years and years and years, the market will go up. On a daily basis, on a 10-minute basis, anything could happen in the market. It's very random. There's a lot of players out there that like to play off of 1-minute charts. This is a 1-minute chart. Each bar is 1 minute's worth of trading. So you get a lot of short-term players that like to trade very short-term, in and out, very active. I get a lot of emails from people saying, Lee, I need to make money quickly. I need to trade a lot because I need to make money. It's super, super, super hard to trade 1-minute charts, 5-minute charts, unless you have a really good system. I've never really been able to do it because the market is so random. The market is so random. And you have to take profits very quickly, and you have to take your losses very quickly. And it's hard to make those decisions very quickly for long periods of time. It's emotionally taxing. It's physically taxing. You just sit there all day watching these 1-minute charts. It's really hard to do. So I don't do that. We like to focus on the daily charts and look for the longer term trends, okay? So right now, the S&P 500 hitting all-time new highs. I'm a bull. I'm a long-term bull. But I know on any given day, the market could be very random. So we take longer-term trades in our newsletters because we need to give the market and the stocks we follow a little bit more time to make that move that we need. Okay, so we're not day traders. We don't trade intraday. We're a couple months at a time. Most of our trades last a couple months because we need to give the market and the stocks time to move in the right direction. All right. So the S&P 500 moving up, looking good. Let's look at the NASDAQ, represented by the triple Qs. This is the QQQs. Now, if you want to know the symbol, it's up here in the left-hand corner, triple Qs. Also, all-time new highs right here. The NASDAQ's been super, super strong. If you follow the markets, you know the most popular stocks are these NASDAQ stocks. And we're going to look at some of those. And just look how this thing is just powering higher. Now, you know, there's other blue lines that you'll see on the charts. These are, you know, we draw some support and resistance line. So there was some resistance up here. You know, if we just look back here, pretending this is what we were looking at, the last top that was made, we drew a resistance line knowing that the market was going to probably have some trouble, or at least that's where it had to blast through if it wanted to make more new all-time highs. So as we fast forward, we can see that the market got up through the resistance line, came back very briefly, and then now has just rallied back up. So this resistance is no longer here. Now it actually becomes support. So if the market starts to come down, this area is now considered support. The RSI down here, you can see getting a little bit close to the overbought level. So we could be nearing a top, a temporary top for now. I'm not saying we're going to have any kind of bearish market, because there's a lot of people out there that say, there's always going to be a bear market. The market can't go any higher. Why is the market going up so much? As I told you, the market goes up because these are profitable companies. But there are times when the market can get a little frothy, can get a little ahead of itself, and we need a pullback, which is healthy. So we may be getting closer to a near-term top for now, get a little bit of a pullback, and then we get ready for the next leg higher, right? So here's the RSI. So it's showing us the market's getting a little overheated. Doesn't mean it's going to crash and burn, and that's the end of it. It just means we need a little bit of a pullback, come to our senses, and then get ready for the next move higher. So let's go back to the SPY, the SPY, just to see where it was there. So, the RSI is starting to move up a little, not as high as the NASDAQ. The NASDAQ's really been going. So the S&P 500 is not completely overbought yet. So it may have some more room to run. Let's look at the Dow Jones, the diamonds, DIA. This is the symbol right here. Now the Dow has not been as strong as the S&P 500 and the NASDAQ. And we'll look at some Dow stocks that you'll see. If you're not playing these really popular NASDAQ stocks, a lot of these Dow stocks really aren't doing all that much. Some of them are just flat and some of them are actually going down. We're going to look at some of those. So you can see the Dow's been kind of sideways here, whereas the S&P 500 and NASDAQ have been going up. So what we can do here, we can draw a little line here. So this will be our resistance line for the Dow for now, and we can put a little, let's make this support line here. So the Dow is sort of in this channel right now, kind of trying to figure out where it wants to go, just kind of moving sideways. So you want some momentum in these stocks. Sideways stocks really don't do all that much for you. So the NASDAQ is really the one that's been going up. So people are really getting on board all these NASDAQ stocks. So let's start to take a look at some of these really popular stocks. We go over a few just to show you what I'm seeing on the charts. So we're going to start with Apple. For those of you that have been watching me for a while, you know that we drew these lines. Apple had been in this sideways channel for a long period of time, stuck between 170 and roughly 200. And they had this announcement the other day that Apple was getting in partnership with OpenAI, and it just went ballistic. It finally blasted through the resistance here, and you can see, look at this move. Apple rarely has big moves like this. A 2-day span, it went from about $195 all the way up to $220. So huge move for Apple, got above the resistance. So for now, Apple's making a new shift in where it wants to go. You get this big up move, you got a little bit of a pullback, and that's also what can be called a bull flag. Okay, you get a long up pull. It's got the pull here, the pennant, and then typically it made the big move, needs to rest a little bit, has a couple days of pullback, and typically the next move should be higher again after people come to their senses, trying to figure out what it wants to do, and then the bulls come out again and starts to go higher. So Apple, to me, is making a typical bullish bull flag pattern. And after it consolidates here a little, the next leg should go higher. Okay, that's the way these patterns work. But Apple, we all know it's a great company. Billions of iPhones out there, Mac computers, iPads, and now they've got this AI element to their company. So Apple is good to go for the long run. Apple doesn't disappoint. Let's look at NVIDIA. Just a phenomenal stock. Had its 10-for-1 split just recently, this past week. It's trading $131 right now. So that means it was over $1,300 just last week. Had its stock split. Just a massive move higher. Just unbelievable, the move that NVIDIA's been doing. But it's also overbought here on the RSI. It's due for a pullback, not a crash, but a healthy pullback, just to get things back and let things settle a little bit. So it's a little frothy up here, needs a little pullback, and then it can go on higher again. But the way that some of these stocks are moving, they just like to keep going because everyone's getting on board. But at some point, it's going to pull back, give you another opportunity to get in. RSI's overbought here. So just keep an eye on NVIDIA. If it starts to, trade sideways, pull back a little, that's healthy. It's just getting itself geared up for the next move higher. But NVIDIA is just an incredible stock. Let's look at Adobe. Had earnings come out just the other day, and you can see here it was trading all the way down here, right around the support level, and then earnings came out. It was trading here one day, and then here's the next day. So it went up about 70 something dollars on here's the last day, Friday, $66.50. Adobe was in this downtrend. It was trying to find support here. We drew this line weeks ago, trading around support, and then the earnings. So, and Adobe's probably putting in a new shift here. They'll probably trade around the highs here for a couple days, of these new highs, and then start to move higher again after that. Here's the 200-day moving average lurking above. This will be the next area of resistance. It'll probably trade up to the 200-day moving average and trying to get through it. So that's going to be the next test for the bulls, to see if it can get through the 200-day moving average. But you use these channels to help you see which way a stock is going. So that's Adobe. What else are we looking at? Microsoft. These big NASDAQ stocks, these are the ones that we're going to focus on quite a bit. You can see we had the support here for a period of time, and then it finally found its footing and went higher. Here's the current state of Microsoft. I believe this is all-time new highs. Let's just go out to the monthly. Yep, all-time new highs on Microsoft. Looking good. We had this is what's called an ascending triangle right here, where the stock or index is moving up, but it's having trouble getting through the prior resistance area. And you can see there was a lot of activity right around here, this 1 week of trading, and it got knocked back down, and then it tried again, and it finally got through it. We could have extended this line just so you can see how it worked out from here to here. Okay, so there was the resistance line, and Microsoft was able to blast through it. So now it becomes support. On the way down, this line now becomes support. So if it comes back down, it should bounce off of here and continue on its next leg higher. Microsoft doing great. Just keeps going up. Give yourself the time. Okay, making these day trades is really hard. Give yourself more time to be right. Buy an expiration. If you're buying options, call options, put options, whatever, give yourself more time, like at least 3 to 6 months. Why do you think you know where the stock's going to be tomorrow or the next day? It's so random. Give yourself more time for the stock to make the move necessary. Okay, so that's Microsoft. What else? Let's look at Google, because I think Google has a pretty similar pattern to Microsoft. We had the resistance here for a bit, and Google moving up. And a lot of times you'll see the stocks hugging along one of the moving averages. This is the 20-day moving average. So you can see Google's been moving along the 20-day moving average, finding some support right here these last 2 weeks of trading. So Google actually looks pretty good here. It looks like it wants to go higher, trying to find its footing here. We can draw a little bit of the ascending triangle here. Okay, so it's trying to get through here. It's moving up. You can see the momentum is moving higher. It just needs to get through that next area of resistance. And the next couple days to fill in the rest of the end of the triangle here, Google should blast up through it. So keep an eye on Google for that next blast higher. Let's take a look at Netflix as another just powering higher. Here again, you can see the ascending triangle that we drew in the past, and it got through. And you can also see how it's hugging along the 20-day moving average here. Netflix had a big day on Friday, Friday, June 14th, right here. I think is this all-time new highs for Netflix as well? Nope, not yet. Netflix, $700 is the all-time high. You know Netflix is going to be gunning for that. It's right here. It's right there. It's ready to get up through $700. But once again, the pattern, the ascending triangle, moving up, moving up, moving up, needs to get through the resistance and finally does it. And there it goes. So Netflix looking strong. Let's look at Tesla because everyone loves to trade Tesla. I say this every week. Cannot figure out Tesla. Can't trade it. It's just a crazy stock. So it was in the downtrend here, trading sideways here. Is it going to do? What's Tesla going to do? It's just not going anywhere. We got some support here, this long-term support, but even still, it doesn't look that good. So Tesla's just kind of trading sideways. Not for me. Can't really trade it. What else? Let me find some other stocks that are worth looking at here. AMD is another favorite of mine. I'm really surprised at how AMD is not really moving anywhere compared to the way Nvidia and Micron have been moving. All three of those stocks are in the same sector. So AMD, it made an all-time new high. It came down and just kind of trading sideways. And I'm not really sure why it's having so much trouble getting off its butt here and moving higher. It's just not doing it. Where we just looked at Nvidia with powering higher, and Micron, there's a symbol MU, Micron making all-time new highs here. You can also see same thing. You're going to see this a lot, this ascending triangle pattern right here, okay? The stock's moving up, hitting the resistance and finally blasting through. So Micron and Nvidia are doing well, but AMD for some reason is having some trouble. But once people realize, hey, we got to buy AMD, this thing's gonna go again as well. You just have to wait until it actually starts to make the move. Okay, so that's AMD. Let's go back to the list here. What else is really worth looking at? Walmart doing well. Disney pulling back. Disney, had a nice move here, pulling back. Don't really have any skin in the game on Disney. I'm just trying to show you patterns that you can see. So let's talk about some of these Dow stocks. We've talked about Bristol Myers before. This is BMY, Bristol Myers, just stuck in this downtrend. A lot of people might be saying, it's a great company, which it is. And, I want to get into buying some BMY, but based on the charts, you really shouldn't be buying right now. The stock is moving down. Why would you buy when a stock is moving lower? Most people say, I want to try to pick a bottom. I want to see if I can catch the bottom here. All you're doing is catching what's called a falling knife, where it just keeps slicing through your hands if you're trying to catch a thing. If you thought this was the bottom, well, not yet. If you thought this was the bottom, well, it keeps going down. Was this the bottom? Maybe for a short period of time, went up a little, and now it just crapped out again. So trying to pick bottoms is really hard. You want to wait for the stock to show you a confirmed up move. Right now, Bristol Myers is not showing us anything. It's just showing us that it wants to keep going down. Let's go out here, look at longer term. It's here. I must have drawn this line before. Right at this long-term support going back till 2012, 2013 or so, but it has broken down below it. Can it hold? Who knows? If it can't hold, it could keep going down, maybe to $30. Who knows? So Bristol Myers, not ready to purchase yet. Pfizer, kind of the same thing. These pharmaceutical companies. Pfizer, down, 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 down. Sideways, sideways, sideways. Had it was making it an attempt to get above the 200-day, the declining or the downsloping 200-day moving average. Got rejected right here and came off again. But it could be trying to find its footing here long term. So keep an eye on Pfizer as well. Here's a long term. Let's go out to the monthly. And you can see also, here's that long term support, just like Bristol Myers going back about 2013 or so. So we're at a pivotal point here for Bristol Myers and Pfizer to see if they want to move back up. Verizon. These Dow stocks, like I said, these Dow stocks are kind of trading sideways, not really going anywhere. Here's Verizon just stuck in this channel right here, sideways, not doing too much. So nothing really going on with Verizon. Costco Great company, got above the resistance line, powering higher. McDonald's in this downtrend. We drew this channel a while ago, just stuck in this downtrend. So if you wanted to get short or take a bearish position on McDonald's, what you do is you wait for it to find resistance at the top edge of the channel, and then take your position here, and then you get out, take your profits when it hits the bottom edge of the channel here, because then you can see it bounced again. So use the channels to, number one, determine the trend, and then use the channels to as your timing play to figure out when to get in. Okay, if you wanted to buy McDonald's, then you would have bought down here when it came down to the bottom edge of the channel. It's just it's timing. It helps you get in the trades at better opportunities, and then you can get out at better opportunities. Okay, McDonald's, Berkshire Hathaway, Warren Buffett. I mean, if there's one person you want to follow Warren Buffett. Let's look at the long-term chart of Warren Buffett. Stock just goes up. Now it's got some sideways consolidation here. Could be gearing up for a big move. So there's two ways to look at it. Number one, we can look at it as more of a triangle pattern like this, or we can even draw a channel kind of like maybe like this or so. Okay, you got maybe two patterns within one. You know, this is what's called your basic triangle pattern, that it's getting tighter and tighter and tighter, and then it's going to blast off in one direction or another. But since it had been coming from down below, moving higher, odds are it's going to blast out to the upside. So sooner or later, Warren Buffett's Berkshire Hathaway stock price, this is the Class B shares, is going to blast higher. So I'm just waiting for that. You can't go wrong with following Warren Buffett. All right. So that's that. Keep an eye on that. Facebook, Meta, also strong. What else? IBM. Here's a scenario here. IBM coming down here. You got all the three moving averages, 50-day, 20-day, 200-day, kind of converging here. So IBM's moving sideways. It's going to blast out higher or lower soon. Keep an eye on that. You want to use these patterns to help you decide what's going to happen. What else? Here's a couple others. Hormel, a stalwart of a dividend stock. Hormel just down in the dumps, not doing much. Kraft Heinz, same thing, just kind of down in the dumps. Some of these Dow stocks are not doing that great. And then we have GameStop. This will be the last one we look at. GameStop, roaring kitty, came out of the woodwork again. Look at GameStop, rallied up and then just got knocked right back down. Went up, got knocked back down. These are the types of trades that lure traders in, these speculators that want to make money really fast. They don't have a lot of money to play with, and then they end up buying at the top and then they get burned. They end up buying at the top and then they get burned. So be careful. This is why a lot of people think that options trading is so easy and people can make a lot of money very quickly. You can if you're the first one in and the first one out. But if you're late to the party, you're going to end up buying here and you're going to end up selling here. So be very careful. All right. So that's it for the technical analysis. Hope this gives you some ideas of what you need to do to become a better options trader. You have to know which way the stock is going. You got to do the research. You got to put in the work. And that's why I make these free videos. If you want to learn more about what we actually do, we're all about option selling. That's our gig. We sell put options. We sell put option credit spreads. Let's quickly go to our website, smartoptionseller.com. Get our free Put Selling Basics ebook. Okay, it talks all about put selling, what it is, why we love it so much. Scroll down here and put your name and email address here. We'll send you an email back with a link for the free ebook. Also, below this video here, in the description, read the description below this video. I have other links, other books, other websites that are good for all options traders. These are websites that can help you. Take a look at some of those. If you found value in this video, please give me a thumbs up, give me a like. Don't forget to subscribe. Tell your friends, leave a comment, send me an email. I'll always answer. All right. This is what we do. We're all here to help each other. Okay. I hope everyone has a good weekend, and I will see you all next time. This is Lee Lowell signing off.